And welcome out to today's halftime report, 10/22/2018. Got my brother Matt and Tim here from Tackle Trading. Matt, how you doing today?
Tim, doing really, really, really good. I always enjoy the fall season because I'm a hoodie type of a guy. Give me a hoodie, give me a hat, give me some, nice jeans, pair of kicks, and that's what this weather is. So I'm doing absolutely fantastic. I'm also excited about the week in the market this week. I think we have a lot of great opportunities, and I'm looking forward to spending the week with the halftime crew this week as well.
Yeah, absolutely. Fall is my favorite time of year, especially here in Utah. And maybe Matt, that takes us back to our time as kids playing football, and
Yeah.
you've got the deer hunt and you've got fall vacation and all that kind of stuff. Utah is an amazing time of
Oh,
year
the
for
uh,
fall.
the hunting season was alive and well this weekend. There's no doubt about that. I went down camping down in our old neck of the woods, Emer County. Went out there on the
Mhm.
desert, and the people I camp with, obviously, they're good folk that enjoy the hunting season, and so a lot of the conversations were around their hunt. It was interesting. It was a great campfire conversation.
Very good. I see the Aussie dollar here dropping. I do want to talk Forex at some point. You did a great Forex report over there this weekend for tackle trading. And obviously, this Aussie dollar is one that you focused on and featured. So we will get into it at some point. Start with the S&P 500. Let's take a look at the market. Market is churning and hanging around that 200 period moving average. Currently at the lows of the day, Matt, like we've said, every day for about 2 weeks. It's not how you open, it's how you close, right? And here we are. Low end of the candle, what you read?
My read is 3 days in a row. I mean, the closes though it has shown tremendous weakness, and you're looking at a market right now that I think is in a very, very precarious situation. And what I mean by that, Tim, is looking at the S&P 500, it has tried to hold this 200-day moving average. But Tim, you got a level right here at about 2750, right? If you look at the kind of the bottoms here, you got a right around 2745, 2750. If you close underneath that level, Tim, that's been a very, very important level. And if you close under that, you could see some quick price appreciation to the downside. So for me, looking at the S&P 500 just from an overall technical perspective, as you can see this level here, 2750 kissed, coming down to 2750 earlier today before it responded back up a good 25 points, Tim, intraday, which is a massive 1% movement intraday, followed by another 1% movement back down to the downside. This is an extremely volatile market. The fear is out there. There's no doubt about that. And look at that 2750 level. You got over here at the lows from last week at 2745. So a close for me under 2750 versus 2745, Tim, that might lead me to go to a -1 bias on the S&P 500. Right now, I still am neutral on the S&P 500, but if you close under that level, all bets are off.
Yeah, 2750 is where we're sitting. 2800 to me is where the psychological level was for a long time. Even over the weekend on Friday, we hit bang, 2800 came down, found 2750. Support and resistance are very simple concepts, Matt, but that's what traders have to do. You set your trading ranges, you watch these psychological levels. Anything that rallies usually has been putting pressure down towards here. A breakdown, Matt, you probably have at least a 50-point sell-off in that scenario, right? About a 2% sell-off.
Well, if you look at a breakdown underneath that level, 2700 has to be in the wheelhouse, right? It just has to. This marketplace has loved whole numbers for years now, Tim. And so when you're looking at this, if you break underneath that 2750 level, yeah, you probably get a quick sell off down to 2700. And at that point, though, you're talking about a bearish downtrend, Tim.
Yeah, for sure. Go from the S&P over to the NASDAQ here for a minute. I think the NASDAQ's got just extreme volatility on it on almost a daily basis lately, Matt. It'll run up, it'll come back, it'll run up, it'll come back. The one thing you can point to on the daily chart, though, that 200 period moving average is holding up technically very, very well over the last couple of weeks. What's your read on NASDAQ?
Showing internal strength here today, showing relative strength against what's happening in the Dow, against what's happening in the S&P. S&P down 12 points so far, hanging around at that 2750 level. The YM contract, obviously the Dow Jones, down about 0.6% so far, down 184 points. The NASDAQ is showing relative strength, up 48 points here. And you got to see that as a positive, a little bit of a mixed signal here. But if you'll look at this, Tim, you saw that same type of sell-off on the intraday that you did in the S&P, but the difference is it found an intraday support level above its previous support level at 7,100. If you're looking at potential plays right now with the NASDAQ holding its head above that 200-day moving average, showing relative strength against the other indexes today, that might be an index you want to go look at, a little deep dive, find some potential trading opportunities on the bull side.
You know, I'm looking at some of the top gainers on the NASDAQ right now, C-Trip, Mercado Libre, Baidu. Some of those Chinese stocks are bouncing back. Give me FXI for a minute, if you would. I see, Baidu and Baba, they are kind of having a little bear rally here, Matt. But any kind of rally, it might make the news as the top gainer of the day, but these are still, charts under pressure from the international markets, don't you?
Let's understand what is happening here in the actual Chinese markets, right? The Chinese markets showed tremendous strength on Friday and yesterday coming into the international markets. And this is not based on fundamentals. This is not based on technicals. This was based on, President Xi basically saying, we will do whatever it takes to keep our market afloat, stimulate the market. And these things we've seen for 10 years with central banks from around the world, right? But when a central bank comes out there, or like the People's Bank of China, or where President Xi comes out there and says that, markets listen to it. The Chinese Shanghai Index, Tim, exploded up 4% overnight, exploded up 4%. I thought that, I was tracking the S&P last night. I was doing some day trading on the S&P last night while I was watching the who was playing last night's football game? I can't remember.
That was blowout. That young man, Pat Mahomes.
Oh my goodness, he is such a joy to watch. I'm not even a Chiefs fan, and I just enjoy watching Kansas City play offense. It's like a picture-perfect offensive football. So while I'm watching football last night, I was day trading on the S&P 500 futures contract, and kind of let me show you what I was seeing here early on in the S&P. And a lot of this was just me basically looking at it based on kind of that Sunday open that we had right here. So here's the Sunday open, and as you see, it immediately went down, but then kind of held its range here, Tim. And so here's when the football game's happening, and I'm day trading this nice little 5-minute trend here. And the whole time I'm day trading this, I'm like, man, this market could see some really positive action today. I love the overnight that was happening, and a lot of it was based on that Chinese news that was happening. And I thought there was going to be a little bit more carry through, Tim. I woke up this morning with flatlined and came down. There's no carry through, and that's very concerning for the U.S. markets right now, which could see another leg down. But there was just no carry through, none.
Yeah, I agree. I mean, the fact of the matter is the market is now selling towards the lows of the day here as we're hitting the halftime report, halftime on the market day. So no carry through at all. In fact, you have continued risk and pressure here as well. Let's look at the Dow Jones, if you would. Let's keep working through the different indexes. Obviously on a daily basis, we look at all the different indexes for relative strength and analysis. Dow sitting on the 200, very much like the NASDAQ and the S&P. The large cap U.S. stock markets are all very much in the same pattern here, Matt. The Dow, we're talking about a few different names here, and they've had some earnings come out. From an overall perspective, though, not much different from the other charts, you think?
Very similar to the NASDAQ. Very similar to the NASDAQ. And as long as you're showing relative strength, I mean, the two indexes right now that are showing relative strength, maybe not so much today. It's only the NASDAQ is showing any strength here today. But from an overall trend and pattern, you got to like the NASDAQ above its 200-day moving average. You got to like the Dow Jones above its 200-day moving average. And if the S&P does not recover and it breaks that 2745 by 2750 barrier, you might be looking at the S&P and the Russell kind of simultaneously doing similar things. And that's a little shocking to me. It's usually the Dow and the S&P that kind of trade in line with one another, and the Russell and the NASDAQ sometimes trade in line with one another. But right now, you're seeing the Dow and the Dow and the NASDAQ showing relative strength. And if you're looking for bullish opportunities, in my opinion, you might want to go look in a deep dive in towards those two indexes to find some really good opportunities.
Top gainers on the Dow here today: Intel, Cisco, Apple, Microsoft, and Nike. You're getting leadership from some of those names. Intel, if you'll look at it, let's go through a few of the better performers on the Dow. Yeah. And this will kind of let you know how the market is performing. Sometimes those beaten up stocks get a little bit of a rally back, coming back.
Yeah.
Intel, Matt. Or go ahead.
Well, I was just going to look at it here in FinViz very quickly. So if you're looking at, say, a specific sector, obviously you can look at specific sectors here. Indexes, you can look at the Dow Jones, Tim. Obviously, we got 30 stocks here on the Dow Jones, point gainers percentage, and so on and so forth. As long as Apple holds up, Tim, the Dow should be okay. As long as Apple holds up, and Apple, got back up above that 220 barrier today. I'm still long with that hedge on Apple. And last week I was cursing you on the first day I did it, but I've been very happy. I've been very happy ever since. And here on American Express, Tim, and I want to look at this chart a little closer on American Express. I'm seeing some very weak signals here on American Express. Boeing, I thought, would hold up more. It hasn't. Boeing has not held up. Caterpillar's been absolutely smacked back down. Cisco showing a kiss of death. You're just seeing weakness across the board, except Disney. Disney's showing relative strength. We looked at that last week. It's breaking out of its 52-week high. You got to like that if you're a Disney lover. Goldman Sachs, Tim. Goldman Sachs. We had a debate last week on old Goldman Sachs, and that is looking prone to sell hard here. Love the technical pattern I'm seeing on Goldman Sachs. Home Depot getting absolutely slaughtered. Intel showing, Intel kind of holding its support level there at 44. We'll look at Intel a little bit closer. Johnson & Johnson, nothing to see here. JP Morgan getting beat up. Coca-Cola here, Tim. This is an interesting little one. If you can break back up above those resistance channels on Coca-Cola, MCD, Merck here is an interesting on a buy side potential. You still got to like the strength overall in Merck. Microsoft showing some weakness. Nike perhaps breaking down here. I'm a little concerned about Nike.
Yeah.
But when you're looking at every stock here, Tim, you're seeing a lot of weakness across the board. We've said it for weeks that this will take some time to smooth out this volatility, to pick some trends in the right direction. Verizon, if you're looking for some safe haven plays, Verizon, Walmart, those two have been proven to be safe haven consumer staple stocks in the past. Look for a breakout of 55. WBA, Walgreens showing relative strength. So there are some stocks out here that are still in bullish uptrends. And if this is me, Tim, I'm looking at those stocks for strength right now. That's what I'm looking for. There's a reason they're relative strength versus some of the other ones. But let's take a look at some of those stocks a little closer, what I just talked about. American Express here. What's your read?
Well, I put it on the option report as a bull because it was one of the only things I could find. I like the green candle. Obviously, 104 has to hold here for a trigger. And by the way, this has not triggered yet. The importance of triggers.
It has to go above yesterday's high.
We had a lesson on that Friday in the halftime report. I mean, I think this is the importance of understanding what swing trading is all about, Matt. If you come in on a Monday and you had a pick lined up to buy it if it breaks above 108, the high of Friday, and it doesn't, then you shouldn't be buying it. I mean, it's pretty simple.
You want to buy into strength.
You need to have confirmation on strength. I have concerns about finance in general. I think that the sell-off probably on AXP is mostly just the financial sector coming back down. They had good earnings on Friday. It was an upward movement in price. We had a good candle on Friday. I'm more concerned.
Your trigger though, with what's happening today on American Express, does it change your overall? I mean, I get what we were doing with the options report. You're trying to find something that's strong coming into it. You got to like the fact that American Express on Friday got back above its 20, got back above its 50-day moving average on an increase in volume. That's a breakout type situation. Obviously didn't hold its head above those levels, but does it change your philosophy coming into American Express this week?
Well, I won't trade it unless it confirms, but I will say, I mean, I'm looking at that and I'm thinking if that thing does start to run and clear 108, you have a trade there. I mean, could you imagine the strength of a green candle if it did start to run and clear and break and give you a confirmation candlestick?
I'd be a little surprised that happens this week, though.
It may not happen. It'll stay on my watch list for the week. And if it does take it out and run, I would take it.
Every one of those stocks on the stock report, the option report, the commodity report, the Forex report, they say on our watch list all week long, waiting for those triggers to happen. What I'm saying is I just don't think it's going to happen given the fact that you're showing a tremendous weakness here today. But the one thing on the sell-off that you have to get kind of look at here, there's no volume on that 1.75% sell-off today. There's
Sure.
no volume there. It is literally, and obviously we're only midday here, so you should see it up here a little bit, but it's certainly going to be less than what's had over the course of the last couple of days, no doubt about that. Disney here, we looked at this a little bit last week. Disney breaking out, and what I said last week on this, I said I wouldn't buy the breakout, and not because it's not legit. It is a legit breakout, no doubt. And my goodness, it's been hard to find a breakout candidate in any market these days. So, but I just don't buy overextended breakouts. I just never do. So I think coming back down and retesting that 118 barrier, though, Tim, I kind of like that retest of that 118.
Yeah, I do too.
What do you think here on Disney?
I think you got a potential swing trade entry point here, because one thing I like about an entry on this, Matt, is you can set a tight stop. When you play
absolutely.
Breakout trades, you're not going to put a stop all the way down at 113 or 110. You're going to put a stop right below that 118 level. I mean, literally.
What do I call this? I call this cheap risk. That's what I call this, right? And I've said it more times than I can count. Cheap risk. When you're getting in, when you should get into a trade at a certain level that you personally have identified. So here I'm identifying 118 as the potential support level, right? The market is coming back down after the breakout of 118, and it's retesting that level, as you can see here. So here's the breakout above 118. Here's the retracement to 118, and now you're kind of retracing intraday to 118 as well. Now, from an intraday perspective, we haven't triggered yet. Okay, we haven't triggered at this point. We're just slowing down. But if we start getting above 118.50, you know, in which has been kind of the highs of the last couple candles on the 15-minute chart, I could certainly see a trader coming in at that point saying, I want to get in above 118.50. I want to put a stop loss below 118. And to me, again, that's just cheap risk. When you have a stock like Disney breaking out and then a retest of that level, that gives you another opportunity to get into something that you might have felt like you missed out already. So I like cheap risk here. And if you're looking for bullish delta, man,
yeah,
find me a more popular, better, fundamentally strong stock than Disney.
Apple. Go ahead and bring it up then.
I'm going to argue with you on that one. I would rather buy Disney right now, and I own Apple.
I like Apple as a trigger above 223, like we talked about, you know. And for everybody out there in the halftime crew, you know, when you're trading, you have to have a bull list, a bear list, a neutral list. You have to have your watch list ready. I like this one intraday right now for aggressive traders. I actually really like it for strength above 223, though, like we painted. That is a very, very clear resistance point right up here, Matt. And
right here.
It comes down to a simple fact. You know, the market can do whatever it wants to do. We're fighting on the 200 period moving average, right? That's on the Dow, the S&P, the NASDAQ. The only one that we haven't looked at yet is Russell, which is just uglier. But if the 200 holds, Matt, you're going to get leadership out of companies like Disney and Apple. And that's why I still am watching them for potential upside plays. By the way, I made more downside plays today. So let's just be very clear about this. I am more excited about some of the put opportunities.
Oh, there's some good opportunities on the downside. And we'll get into that. But again, the difficult part in the last 2 weeks, Tim, has not been able to find bearish delta. Yeah. That has not been the difficult thing. It is, I mean, let's face it, throw a dart at the S&P 500. I guarantee you're going to more likely find a bearish candidate than a bullish candidate. The difficult thing has been able to find good, solid bullish candidates. You're looking at Apple right here. Apple's the biggest stock in the world. Apple has held up relative in comparison to what has happened in the marketplace. You have clear support right here at 215, Tim. Clear support on the daily chart at 215. I like your trigger above 223 here. Now, obviously, I got into it this day just as a hedge against my other bearish trade. So, you know, obviously it's worked out a little bit, but a new trigger above 223, 224. Yeah, I certainly could see that. Disney as well. Looking at a couple of the other ones that we were looking at in the Dow. Merck here, Tim, doing a very similar thing to what Disney is doing, testing its breakout of 72. Although I don't like the candle pattern nearly as much on Merck as I do on Disney. That's a bearish engulfing candle. I expect that to come down a little bit, but that might give you a good opportunity on Merck here in the next few days as that comes back down into that rising 20-day moving average. So I put Merck on a watch list, put Disney on a watch list, put Apple on a watch list, all of those in terms of those Dow components. if the Dow holds its 200-day moving average, those three should benefit off of it.
Yeah, and it had to make your morning to see Goldman Sachs down 2% today, since we had all those internal debates.
I don't know what I like more, being right or making money. I really don't. I don't know which one. Again, Mark is one of the best fundamental analysis I know. He understands earnings more than anybody else. He's
Sure.
that analytical, the deep dive into it. I'm just a technician. And technical, that was a bearish downtrend coming back into resistance. I didn't care what the earnings were.
Yeah. Lots of stuff going on in the market here today. Welcome, halftime crew. Give me the Russell 2000, if you would, Matt. The one area of the market that's just been under extreme pressure, there have been many, actually, international markets, China, the EEM, certain stocks in those areas, but also small caps have been just completely beaten down. I'm looking for another potential breakdown here, Matt. I know we're in no man's land, but 1540 is where we held the lows there during the sell-offs. And it is not showing me any strength on the Russell. I'm carrying a net delta on RUT myself personally. I think if you are a trader who does any kind of cash flow with these big indexes, you have to be aware of how to hedge that delta risk. Sitting down here on a doji, Matt, if the market sells, this one's going to take it on the chin.
Well, the easiest way to hedge that is just to buy a put option on the RUT. Yeah. Or IWM, right? I mean, that is the easiest way to hedge that cash flow condor system. So if you're looking at this as a potential breakdown, and I am as well, it's just holding its support channel. I drew that support channel right here for you. It's between 1530 and 1540. That's your support channel on the Russell 2000. You see a break below those levels and you're carrying a cash flow condor system, you got to hedge by buying put options.
Yeah, I agree with that. And whether that's right with the ETF, the index, or even out of the money stuff, there's a lot of different things you can do for sure.
Yeah. Well, last week, I know you hedged. What'd you do? You hedged with a 25 delta?
Well, there's a couple of different ways I hedge. I'll add on more credit spreads out of the money if I still have position sizing allocation to do that. That's for another time. I'm not going to get into that.
That's a cash flow club topic.
One of the simplest ways to hedge, Matt, let's say like I have a 10 and 10 bull put. If I take off one of the short puts, now I'm in a -9 +10 bull put, and it just took out some delta. It's like buying a put option, but now you're ratioing the spread.
Less than 1% actually understood anything you said.
That's okay.
That's okay. That's why you need to come here, and that's why you need to get in Cash Flow Club, and that's why you need to get in the coaches shows and all that jazz. But the simplest way to hedge
I got to tell you a story. Hold on. Time out.
Go ahead.
Timeout button. I need the timeout button. Okay. And I was at an event last week, and one of my students, a person that you know very well, was receiving an award for her trading, and she had successfully navigated the markets. Very, very, very proud of her. And she gets up on stage, and they're showing her video, Matt, and there's mostly about 90% real estate investors and entrepreneurs in the room. And they started talking about one of her best trades ever is when she sold 10 bull put spreads at the 195 strike price. She then took assignment on that stock and then sold covered calls on it, eventually delivering it for $215 a share. The whole room is just like, what the hell are
they talking about? And they're probably like, wait, I thought wholesales were just what we needed.
Yeah. And one of our halftime crew actually
explaining was the boomerang trade is what they were explaining.
That's
and
right.
For you real estate investors, we get that cash flow with clicks of buttons here. So Beth, obviously a Legacy Education Hall of Fame student. Big ups to Beth, big ups to Legacy. It's always amazing, Tim, to see our students get honored for their hard work, and Beth put the hard work in. But Tim, big ups to you too, my friend. You have two mentor students in the Legacy Hall of Fame, and I don't know another mentor that has more than one. So Tim, good job. You're one of the finest mentors in the world, brother.
Well, and really what it comes down to, and there was a moment on stage that reflects the way that I had to mentor Beth. She said, and Tim, I'll tell you, thank you for telling me when I was wrong, because you kept telling me, Beth, you're messing up. You're breaking your rules. And I'm not afraid to say that. No, if you miss an opportunity, if you make a mistake, that's okay, but you got to learn from it. There's no doubt about it. We'll talk more about Beth on the podcast. But anyway, you have to hedge. I mean, if this RTY breaks down and sells aggressively, Matt, I have concern about another leg down. And frankly, who knows where that bottom is? Probably another 40 points to the downside. 1,500 seems like a natural testing point.
Well, it's a technical whole number as well. I
Yeah.
would say it goes to 1500, but Tim, 1500 is a 30-point swing. That's a 2% downward movement in price. That could blow up a condor, which means you could hedge it with the put option. So
Yeah.
use, IWM, I would say, is the best way to hedge it. It's a cheap way to go get some bearish delta to offset the Russell Condor.
Give me crude oil, the dollar. Let's break down the commodities market and the currency markets a little bit. In crude oil
So
first, or the
let's go.
dollar. Either
Let's
way.
go. Let's go the dollar first.
Sure.
And the reason I want to go the dollar first, Tim, is I think this is the most important chart you could look at this week. Now, obviously, as a currency trader, I'm biased towards the dollar. There's no doubt about that. But to me, there is so much that hinges on what the dollar does at 96, Tim. And my Forex report yesterday, I did a deep dive on the Australian dollar trade, and basically and I don't know if you guys have read that Forex report for the pro members. Please go read that Forex report, because I kind of did it in a different way. I told a story of one of my students who wanted to trade currency, doesn't understand leverage, doesn't understand margin, doesn't understand correlation. And the whole point of the story and the whole point of the deep dive into the trade on the Australian dollar was to teach people that if you in the currency market, if you make one trade and then you add on another trade that is correlated with that currency against the dollar, you're basically double leveraging yourself. So what I was looking at was the Australian dollar versus US dollar, and I believe it was the New Zealand dollar and the US dollar. Those two have a 93% correlation factor against the US dollar. So if you're looking at trading the Australian dollar versus the US dollar and the New Zealand dollar versus the US dollar, you can't do them both because it's basically the same trade. And my whole point was, if you're over leveraged going into this, you could blow up an account very, very quickly. And so I just used it as a way to teach things, but the whole report revolved around the dollar at 96. Okay. 96 to me is very, very, very important. If you break 96, you're going to get a quick run up to 97. And you might say, oh, Matt, that's only a 1% movement. That's not very big. That is a big movement on a currency. And a lot hinges on this, because if the dollar breaks out, you're talking about long dollar versus the yen. You're talking about long dollar versus the Aussie. You're talking about long dollar versus the New Zealand dollar. That is a big situation for me, and we are testing that right now. You are smack dab at 96. If you break 96, you're looking at a positive dollar coming into the week, which would put a lot of pressure on those commodities such as crude oil, silver, gold, and those currencies that are tied to those currencies that are tied to those commodities, such as Canada and Australia. It's important.
Yeah. A breakout on the dollar is very technically sound. And by the way, the index breakout is just going to set up all those Forex pairs. And I really loved the way you explained leverage and risk in this week's
I'm already triggered into two positive dollar trades. I'm looking at a couple cross pairs here as well. And again, just go look at the Forex report. I did about a 35 minute video. Tim, I know I'm supposed to be like 10 to 15 minutes on those Forex videos. I just can't do it, guys. You can't get me to talk for Forex for 10 to 15 minutes and do a deep dive on all those currencies. So it was more like a 33 minute video, but I tried to get my analysis in as quickly as possible.
Well, the thing about it is, Matt, we have such a dynamic group of students that are all part of hashtag halftime crew and our tackle trading pro members.
Mm-hmm.
I guarantee they appreciate the care, and
well,
going a little bit longer. Now, by the way, if you do 2.5 hours, I might have something to say.
Okay, I'm not going to do a 2.5 hour video for the Forex report, but one of my pet peeves is the insta-take economics and lifestyle of 2018, where you have to do everything in 30 seconds, 14 seconds, 60 seconds, 90 seconds, or people won't watch you on YouTube. That's not who I'm targeting changing lives, Tim. I'm not targeting people who have the mental capacity to only take in 30 seconds at a time. That's not who I'm targeting. I'm targeting people like Beth who are going to dedicate to this, to have a life-changing moment. And she had that on Saturday, and Tim, and it was awesome.
Give me metals first, then crude oil. I want to talk gold and silver here. We've been talking about the potential upward movements in these products for a long time. Red candle today, Matt, more of the same. We've got a real tight consolidation going here, guys. Pay attention to an upside breakout. I have gone bullish on gold. I have gone bullish on metals over the last month or so. We've been talking about it. We felt the momentum changing. It's not like a rip-roaring chart yet, Matt. But days like this do not get me concerned. They actually give me more clarity that actually we're holding some of that upward movement.
If the dollar breaks out of 96, you should be concerned.
I get that, but they've not always been correlated.
Let me finish. But that could trigger into a really good buying opportunity on gold as it comes down to now a rising 20-day moving average for the first time in years, or the first time in months and months and months. So even if it does come back down, my trade on gold is a position trade, Tim. I'm not getting it just because it comes. I'm not getting out just because it comes down a little bit. So I'm position styling this on gold just simply because of reversal. But if it does come back down, for those of you that missed that breakout of 1220 initially, if it comes back down into that rising 20-day moving average, Tim, the most likely scenario, and I want to paint a picture for you guys, okay? The most likely scenario in that is that dollar breaks out of 96, screams to 97, gets overextended, and look for the dollar to retrace at that point. On the flip side, as that dollar breaks out of 96 and goes to 97, gold here comes back down into a rising 20-day moving average, forming a bullish retracement. At that point, that to me is a really, really good buy situation.
I love any good trigger on gold. And you know, the thing about technical analysis, Matt, if it pulls back pivot trigger, we're going to buy, right? But if it upside breakouts, we're going to buy. We're literally going to buy any technical signal. That signal is not here today, just a red doji, kind of small range candle inside the range. Silver. Now, you talked about silver much last week. So did I. We heard from Pete Thomas on a podcast. He loves buying silver down here in these ranges. We're sitting on those moving averages, Matt. They should hold some support. We will know. Could you go long silver here?
Yeah, you could. I mean, certainly. I tried to make the argument last week, and you guys told me no.
Yeah, I wouldn't. I would wait for confirmation.
I think the best is waiting for confirmation here on silver.
I agree with that. Crude oil. Now, Brent broke above $80 a barrel. CL is the one that I trade. I like the zone down here, Matt. We're at 69.16. If you were trading technically, you would need confirmation back up above the 70 and a half range to play it bullish.
I would say, and again, I'm already in, but I would say a trigger into it would be a close above 70. That would be your first trigger. I think also another trigger is the $67 range, right where that 200-day moving average is. I could certainly understand somebody picking it up at the 200-day moving average.
You know, one thing that we talk about every now and then is scaling into positions. I actually could map out a very logical scenario where you buy half your position on a break back above 70, and then you buy the other half on a break above 72 and a half for further confirmation, right?
Well, I'm only a third into my position size rule on crude. And what I want you guys to understand here is, let's say, and let me just pick some round numbers, okay? Let's say my position size rule is $3,000, okay? So I like the technical setup last week, took a stab at it at $70, and I take a third of my position size, right? And then let's say, okay, upon confirmation of the breakout of 72, you add another third to your position size, or it comes back down to the 200-day moving average, and you like that, you add another third. Very rarely, unless I get a really clean technical setup, do I go full position size, Tim.
Yeah, I mean, and that is scaling in, position sizing, money management, knowing how to make your entry or layer into your entry. That's your veteran, trading skill set coming out, Matt. But those are important things. In fact, more important than even the technical trigger a lot of times is the fact that you money manage it properly, right?
Well, and I also think it's really important in this volatile condition that people reduce their position size as well. So if your standard lot size is $1,000 into a trade, you drop that down by 50% in this environment, in my opinion.
Yeah. Give me the market skyline over at Tackle Trading. I want to go through the sectors, Matt. On a Monday, we're prepping the week. We're looking at the full week. We're kind of thinking through all the different layers of the market. And then we'll have a trade of the day here at the end. By the way, we are at the halftime point of the halftime report. And guys, I always like to take a small break here, kind of step back and say thanks for being here. #halftime crew. Let us know that you're here, you're enjoying it, you're getting value out of the content. And if you do get value out of the content and the show every day, give us a quick like right there on our YouTube. All right, very good. And Matt, I do want to go through about 3 different things here before the end of the day. I want to look at the earnings calendar for the week because we have a big week of earnings. I want to look at the economic calendar and kind of lay that out. But I also want to dive into the sectors here. And on the skyline, we have a little widget with all those different sectors. I think probably that next one down. Why don't we start any one of them? We could start with real estate. We could start with any of them.
You
but
can
let's
start with the
down.
easiest one.
Yeah.
And that's real estate short we've been talking about, Tim.
Yeah.
You can't see this here, but that's the 200-day moving average, ladies and gentlemen. That thing triggered into a potential sell-off here. If you're not into it, break down below the yesterday. But let me quickly look at this, Tim, on XLRE, because I think this is an important setup here, XLRE. Okay, so here, as we've been talking about, as it's rising back into those 20-day moving average, the 50-day, the 200-day moving average, look at that bad boy trigger right back down. Love that bearish setup on the real estate sector. I've been bearish here for about a month and a half now on this sector. I'm looking at getting extremely bearish. I think real estate is in for a very rude awakening over the course of the next year, Tim. I'm very concerned about the housing market. I'm very concerned about the real estate market in general, especially in a rising interest rate environment. And so, and my concerns are based on technical analysis and economic analysis and rising interest rate and so on and so forth. But I want to take advantage of that on the downside. We need to get those real estate investors understanding how to read a chart, Tim, so they can protect their real estate investments by buying put options on XLRE, because that is about to get absolutely butchered in my estimation. Look at the intraday analysis for your potential triggers. Consumer discretionary just showing tremendous weakness lately, Tim, looking very similar to the Russell 2000, just getting absolutely butchered. I wouldn't be touching this sector right now. Technology, you're looking at in the NASDAQ, and what you're looking at is just relative strength at the 200-day moving average. XLI industrial showing breakdown material here, Tim. That is showing relative weakness, and I expect that to continue moving down. XLB has been butchered, and it continues to get butchered. This is a bloodbath in the material sector, Tim. This is just tremendous movement. We're talking upwards now of a 17% decline from the high to the low over the last month in the material sector, and I don't see that happening. People made the claim, hey, listen, it's slowing down. Maybe we should buy. Absolutely not. That's a low base. Just take a break, and now it's running again. Materials should continue to get absolutely butchered. Energy getting absolutely butchered. And you know, we put out the scoreboard there, Tim, and I was very passionate about how bearish I was on energy. I said energy is going to get its ass handed to it, and it is doing that. This chart is ugly upon ugly. I don't see a quick turnaround in basic materials or in the energy sector. Consumer staples showing a little bit of strength relatively to the market, but this overextended coming back up into resistance. I expect this to come back down and test that 53.5 barrier. But, you know, obviously, you know, that has shown a little bit of strength recently compared to the other sectors. I got a neutral rating on the consumer sector, the consumer staples sector. Healthcare, I just want so badly to turn around, but that kiss of death was too much to overcome. Look for that to come back down into the 90 to the 89 level. You're looking at the utilities sector. You know what? The one sector that when everything goes to hell, the one sector that stays forth is utilities, because we're going to have to keep the air conditioning on. So in terms of that, if you're looking to add some bullish delta, look at the utility sector to offset some of that risk. And then the financial sector is in the process of breaking down right now. What you're seeing, Tim, is across the board, weakness after weakness after weakness, and that's not going to stop short term.
I agree with that. And, you know, I went through, and you and I, Matt, we charted pretty much every stock in the S&P 500 last week because we do our market prep for the entire next week so that we can have our scouting reports done. And I don't see a lot of strength in the market. The market's pretty top heavy. That's why the companies like Disney and Apple are the ones I'm interested in long.
Well, that's the only reason why the Dow has held its 200-day moving average, Tim. Right. Because you look across the board, stock after stock after stock, it's showing weakness. You look at sector after sector showing weakness, industry after industry showing weakness. It is those top-heavy stocks in the Apples, the Disneys, the Merck with healthcare, and Pfizer with healthcare, and Boston Science with healthcare. It is a top-heavy market, and one of two things is going to happen here, and I don't know which one it is. Obviously, I'm a little bearish here after looking at those sectors and seeing and I am carrying a bearish delta right now, Tim.
Mm-hmm.
But in terms of this, either one or two things, either Apple and Boeing and some of those big stocks that have held up a little bit, either they come crashing down with the rest of the market, or the Netflixes and the Facebooks of the world turn around. And it's got to happen one way or the other. That's what's going to have the 200-day moving average hold and start moving up or decline, is if Facebook and Netflix and those dogs of the dogs over the last 2-3 months, if they start coming up, you should see the Dow, the S&P, and the NASDAQ both perform relatively strong off that 200-day moving average. But if Disney and Boeing and Apple come down, I think it's game over.
I agree with that. I think that if Apple breaks 215 on its chart, you have not game over, but game on. Okay. I mean, you have the
no. Game over for the Bulls.
That's right. But game on.
I just dagger 3'd you with 0.2 seconds left. You can't get a shot off. That's dagger. I turned out the lights. It's over. Go home.
Did you see the Jazz Golden State Warriors basketball game last week?
Don't get me started. Nonsense. Get off.
I mean, it was a tough finish, but I got to tell you, what an incredible game.
No, the Jazz won that game. I don't believe the record. The Jazz won.
All right. Well, they have official scores.
I don't care what the NBA says. I'm right. They're wrong. No, I kid. It was a great game, Tim. I watched every second of it. I loved the game. Golden State. I enjoy watching Golden State play. They're just so gifted at basketball. But yeah, great game. If
you guys out there are basketball fans, get on these Jazz. I'm going to tell you right now, get on these Jazz. They're going to be a great team.
6. What would that put them? 56 and 26? 56, 26. I'm saying it. Take the over. Take the over on the Jazz. Do it right now.
I like it. Go up and give me a heat map here for a minute, Matt. I want to look at the earnings day performance, talk about earnings season a little bit as well, highlight where we are in the overall expectation. First of all, the heat map on the performance, you see basic materials, healthcare, financials, and industrials all going down. Services and tech are rebounding today. We got a mixed market. Scroll down and find the earnings date performance. I really like this one. Mm-hmm. Now, everything in dark has not had earnings yet.
Yeah.
Okay. So this gives you an idea here, guys, that we are only starting earnings season. I know we've had a lot of headlines and conversations and discussions about earnings, but the reality is, Matt, there's not a lot of, green and red on that chart right yet. A lot of the companies set to release earnings are going to be this week and next week. We are in the thick of it, guys, and it is all right in front of us. Best performers so far, Matt, we've had good performance out of Netflix, although it did come back down. Johnson & Johnson, PG, United Health, mixed out of everywhere else.
Don't forget the PayPal. PayPal had a really, really good earnings. Autodesk had a great earnings. But what you're seeing is just mixed signals here. Right. Yeah. And that's one of the reasons the market has not responded the way, either bullish or bearish. It's kind of been hanging out at that 200-day moving average simply because you have mixed signals. That's it. But if you're looking at, coming up close, in terms of earnings. So if I go to earnings date, mm-hmm. Okay, the pink, look at all that pink, Tim. Isn't October pink? Is it October Cancer Awareness Month?
That's right. Yeah. So
it's when all the NFL and everybody wears pink, right?
Correct.
I'm going to buy a pink hat. I'm doing it.
I like it.
I'm supporting this. I'm supporting it 100%.
We are right in front of some major earnings this week as well, Matt. Obviously, you're going to get a lot coming out, but the likes of Amazon, Facebook, Microsoft, Apple, as they release their earnings report, it's going to be key. In fact, go to FinViz here for a minute. I want to show people how to look up earnings dates by day as well, something that you can do on a daily basis. Guys, earnings preparation, understanding of earnings season, avoiding earnings mistakes, it's a very important part of trading, in my opinion. You can set the earnings date here to tonight or even large cap plus first off. Absolutely. And then today after the market close here, Matt.
Let's go after the market close here.
Yeah. So you got TD Ameritrade.
Oh, TD.
One of our favorites.
No, it is not.
I have opinions about that company, even though
we're not, we use TOS, but TD Ameritrade, I want you to hear from me. Okay. We don't like your customer service or how you're treating your customers and how you're trying to nickel and dime them. And we also don't like how you're selling our data to high frequency trading systems, TD. Get the hell out of here.
Preach.
You're lucky you have TOS.
I agree.
Clown shoes. They're getting
Well,
nominated for clown shoes for stealing our data and selling it to high frequency trading systems. Get out of here, TD.
I'm not a big fan myself. Tomorrow before the market, so you have TD Ameritrade obviously tonight, and then over up here on the left where it says earnings date, click on tomorrow before the market. Tons of companies, Matt. I mean, you look at that by market cap. Verizon, McDonald's, 3M, United Technologies, Lockheed Martin, Nextra. These are all higher than $50 billion companies. Caterpillar, Biogen, a Tackle 25 stock. We have a huge day tomorrow. Okay.
Big day tomorrow.
And as I look throughout the entire week, and go ahead.
Big day for industrial tomorrow. Okay.
I agree.
Caterpillar, Lockheed, 3M. Big day for industrial tomorrow. Big day for healthcare. Biogen, one of the biggest biotech companies out there. They're reporting earnings out there as well. McDonald's, consumer staples. That's a big day. It's just a really, really big day. And that's before the market opened, Tim. After the market, then you have the likes of Texas Instruments, which is technology. You have Financial, Chubb, and Illuminata and whatnot. But if you look at this entire week, Tim, looking at just this entire week from market cap perspective, you're talking Amazon, Microsoft, Google, Visa, AT&T, Intel, Boeing, Merck, Comcast, Bud. This is the week, bro. This is the week. This is a game-changing moment for the market this week, in my opinion. This is the week I've been waiting for with earnings the whole time.
I think the most important one is Amazon. They have the most volatility in their earnings. We pretty much know Apple's going to come out and blow the doors off most earnings, and they're up or down 5%. Amazon, I mean, Matt, they've had some up and down moments in the last year or two. Most of their earnings have been pretty good. When we get closer to that one, we are going to deep dive into Amazon, and we can even
Amazon's one of those ones, if it has a rock star earnings, that could lift the entire market up.
Yeah, I agree.
The entire market up.
Yeah, we've got a lot going on from that perspective here this week, and really, and go to Forex Factory. Let's look at the economic calendar for a minute as well. As we think about all the stuff going on in the market, you come in on a Monday morning, you're like, well, the market's dojing on the 200-day moving average. Guys, it is a huge week here in front of us. You need to be prepared. You need to be on top of it. You need to be ready each and every day as you kind of navigate the market. Break down the economic calendar, if you would.
There's a couple economic events that we need to, and now listen, the only thing that matters this week, in my opinion, is earnings. Okay, for the stock market. GDP data is going to come in relatively good in my estimation. You have two economic reports this week for the U.S. that you need to concern yourself with. The first one is the core durable goods orders, which would impact the industrial, the Dow Jones and the S&P a little bit more than it would the other indexes. But the advanced GDP number is the one that you want to look for. We had a rock star GDP coming out of last quarter, 4.2%. Nobody in the world expected us to do that twice in a row. Okay, nobody did, but a 3.3% forecasted number is really, really, really good. There are some concerns I have with coming in above or below that level, and then that kind of starts with housing and consumer confidence and all that jazz. But I do expect a positive GDP report above 3% and most likely in that 3.3% range, but that happens on Friday. But that, to me, is not the story from an economic perspective this week. From an economic perspective, you got to look outside the U.S. in my estimation. Okay. And you got two really, really, really big events this week that's going to impact the international markets as well as the currency market specifically. And that starts with on Wednesday with the Canadian dollar. When you're looking at Wednesday, you have a monetary policy statement coming out on Wednesday that's going to impact the Bank of Canada. Look for them to increase interest rates by 1/4 point up to 1.75%. Now, Canada has been very similar to the U.S. Once the U.S. starts raising interest rates, Canada starts raising interest rates. That has shown a little bit of a boom for the Canadian dollar recently. And so look at that from an overall perspective. But another one that's coming here is on Thursday. And unlike Canada, unlike the United States, Mario Draghi, you're going to kill the euro because you've never seen an interest rate hike you actually enjoyed or liked because you don't care about inflation. Mario Draghi, and I want to show you this, Tim. Here's the main financing rate. Here's Mario Draghi. This is Mario Draghi. I've never seen a rate hike I like. Let's cut it. Let's cut it. Let's cut it. Let's cut it. Let's cut it to zero. And then you see how it kind of goes slightly under zero, Tim? Because it's been in a negative interest rate for the last 2 years. Mario Draghi is not going to come off that, especially with the Italian debt crisis. I expect Mario to do what Mario loves the most. And he's like Gerardo from the Bank of Japan. They love negative interest rates.
Yeah, I mean, you think about the major, central banks around the world, Matt. They've all kind of been under pressure with interest rates. That's why what's going on in the U.S. right now is such a big deal, because the first time any one of these major central banks has been raising interest rates significantly. Interesting stuff going on.
The patriot for raising interest rates, and Mario Draghi, you're a coward.
Oh, I go check out Matt's Forex report from the weekend. There's no question about it.
If you guys don't understand, don't know by now, I am a hawk when it comes to interest rates. Yes.
Well, they should be normalized. I mean, we should not live in a manipulated economy.
The Fed should have a neutral monetary policy. That's what they should have. They should accommodate in moments of crisis. They should neutralize outside of that, and they should go hawkish with any risk of inflation.
Couple of trade setups that I think are looking pretty good here, Matt. From over the weekend, and there's quite a few different stocks that we talked about on the reports. I love the Aussie dollar Forex pair setup, no doubt about it.
I don't know if I talked about this last week. Can I quickly talk about it, Tim, and then you can talk about yours?
Yeah.
I tested out buying put options instead of just doing the actual Forex trade on the Aussie dollar last week.
Mm-hmm.
And if you look at and I believe let's see if I have those here. Pretty sure I have the Forex. Yeah, there we go. Okay, so here is the Australian dollar on the ETF. It is not liquid in any capacity on the stock. It isn't. Okay, you can't short it. But I did find that you had some pretty tight bid-ask spreads here. And so I came out to market, and I was looking at a 10-point bid-ask spread here. And I went out and bought put options, and Tim, it got filled very, very, very quickly. Okay, very, very quickly. But again, it's still very illiquid. But I just wanted you guys to start tracking these from a Forex perspective, because these are going to get more liquid over time, and they're going to get to the point where we can trade them fairly aggressively. They're not there yet, but start tracking them, because a lot of people that don't trade currency is simply because they don't understand the language of the Forex market. If we get these ETFs to get liquid, we can remove that language barrier from the Forex market. We can remove the leverage from the Forex market, and simply more people could participate in the Forex market. So I just wanted to point that out. But if you're looking at the Australian dollar versus the US dollar right here, still love it. Still love the trigger even today.
Yeah, I like that as well. One of my trades of the day here, Matt, John Deere, DE. And I hate, going against the industrial sector, but the reality is it is starting to break down here. 145, this is a support zone here. We put in a lower low and a lower high. I know that it's trying to hold itself up here at 145.82. Intraday, you need to have further weakness. But Matt, in general, we're rolling moving averages over. We're breaking below support. I like this as a potential put trade or bear setup.
I just want to go get my deer hat.
Do you own a deer hat?
I used to. I don't have one anymore. But I want to go get one because I like this company. It's for the same reason I like Hog, and it's for the same reason I like Caterpillar and Cummins, and it just reminds me of our heritage growing up more than anything. But a close under 145 is really weak here, Tim. It's really weak. Mine, EQIX. This one, and you do have earnings coming up here on the 1st, but you still got some time here. I like this kiss off the 200. I like the slowing momentum at the 200. Look for a trigger underneath. Most likely, I would say 410 to trigger underneath on the downside. With the cost of the stock, you're looking at potentially bear call spreads here, or you're looking at bear put spreads. But you would have to do some type of spread.
Well, and knowing where the earnings is, Matt, I think is a very important thing. I know on Thinkorswim, and we complain about TD Ameritrade, I like the fact that the earnings are right there,
Oh, I love Thinkorswim.
on the chart. Yeah,
Listen,
I love Thinkorswim.
What I said about TD Ameritrade is not Thinkorswim. If it wasn't for Thinkorswim, I would have stopped using TD Ameritrade when they bought out Thinkorswim 10 years ago.
Sure. All right. I like it. Very good. Cody, what's your trade of the day?
What's your trade of the day?
I'm going to go with Western Union. It actually triggered in today. Nice little short right before earnings.
What's Western symbol?
WU.
WU. Yeah. Bearish downtrend trigger on today. Absolutely. That's a stock play, directional play, like it. Earnings coming up on the 1st. You got time on that one.
Yeah, there's enough time to pick that one up.
I think you target only 17.5 here, Cody. I don't think you can get any more aggressive than that because earnings is coming up.
Exactly what I was kind of thinking. I'd probably just take the base hit of 17.5.
You know, and typically, Tim, on something like this, on where it's triggering, it really kind of triggered on Friday, but this is another trigger to get into it. Cody, I want to put the stop loss above 18.5 on this one because you're only looking at this trade for 2 to 3 days. 10% of the HER above the high, I think, is a pretty good stop loss here.
Beautiful.
I like it.
You know, looking at the week, we got a few events here planned. Matt, last night we were going to start a technical analysis course. We had some scheduling, communication.
We had some scheduling miscommunications, and guys, that is the first time that's happened to us, so we apologize for that. So please accept our apology. We'll do what we can to make up for it on the back end. But that technical analysis 101 mini class will be on Wednesday and Sunday this week. Coach Noel will be conducting it, and I believe it's going to be at 9 Eastern.
That's right. Yep.
Okay, 9 Eastern Standard Time. And if you don't know how to get into it, we are going to send an email to the pro members so that you guys have the link to access. And this is just a value add we're doing once a month for you pro members. So if you're struggling with technical analysis or sometimes don't understand what me and Tim say on the halftime report, make sure you're showing up there on Wednesday and Sunday as Coach Noah is going to walk through the basics of how to read a chart.
Yeah. And as I look at the intraday right before we wrap up our day here at the halftime report, by the way, hashtag halftime crew. Great to have you guys.
Like and share, baby.
Kind of flat, Matt. Like we've said this before.
Hold on. I want to take a peek here. Adam said MU breaking under 40. I think that's a good breakdown here, Adam. Look at the intraday here. Okay. Ooh, I like this, Tim. Okay. Intraday breakdown of 40, retrace back up into 40, slowing its momentum. That's a trigger underneath 39 and 39.80 for me there. I like that setup, Adam. Good job, buddy.
Yeah, technically sound. There's no doubt about it. With the market also, the NASDAQ's actually selling here as I'm watching right at about 1:30 Eastern time. There's 2.5 hours left in the market, Matt. I think there's a lot of action right in front of us. And with earnings this week, who knows? I have a negative delta in my account right now, guys, which means in the short term, I'm leaning bearish. But I also have a mixed account because there's still some upside potential. And really, what it might end up being the best opportunity right now, Matt, is just picking the stocks as you see them set up, right? We've said it many, many times. It's a stock picker's market. You look at MU, you look at these other opportunities. There's a lot there.
Yeah, I have a negative bias in my portfolio right now, but it's a slight negative bias with the hedges on Boeing and Apple I have. So, and I'm looking to add Disney to that as a potential hedge as well. So if they make money, it basically offsets some of my negative delta. But, I think it's going to be an earnings week. Obviously, that's what it's going to kind of drive the market this week is earnings. Amazon's going to be that big one, but we have a tremendous amount of earnings happening this week, so keep an eye on that. I think it's more of an earnings than a technical week, but definitely keep your eye on that 2745 by 2750 level on the bottom side. Keep your eye on the 200-day moving average on the Dow as well as the NASDAQ here. And if you're looking at relative strength, the NASDAQ is holding up.
Fantastic. All right, guys, that's it for our halftime report. Thanks for being here. Wonderful show. Great job, Matt. Great job, Cody and Prep. Always love it. A lot of good picks out there. A lot of great analysis. We'll see you back here tomorrow, same time, same YouTube channel. Subscribe, click the bell. Make sure you get
guys. We've grown this organically. So if this halftime show is helping you out, do us a favor and tell somebody about it.
Say la vie.